Hi there, good afternoon. You're watching Closing Trades on ET Now. I am Snehisha and you're catching us live from the Suzlon studio here at ET Now. Last lap of the trading day left is taking a look at what's happening with the street right now. The Nifty 50 currently lower by 0.2%. We're back below that 24,400 mark. Remember, about at 12 o'clock also at the halftime mark of the trade, we did see a stellar recovery coming in from the day's low, and we've slipped slightly from there because at one point of the trading day, we were close to 24,430, and in fact, that's the highest point of the trading day, and from there, we have fallen another 60 to 70 points. Sensex absolutely flat but has tipped over to the red. You have the small cap index that continues to hold on to a speck of green, but the Nifty mid-cap has also docked over to the red right now. The India VIX, however, has cooled off by 2.25%, so that looks good. And from the broader end of the market to the tilt when it comes to the Nifty 500, it's slightly towards the declines because you've got about 264 stocks in the red, 235 in the green. So quite even, Stephen, a smidge of a tilt coming in towards the red. And speaking of the stocks that are under pressure, it's Apar Industries lower by 4%, Physics Wallah's lower by 4%, Nalco that saw a very sharp surge yesterday on aluminum prices, that is seeing some correction today. Schneider Electric, Force Motors, Poly Medicure, Chennai Petroleum, Aether Industries, Zydus, Belroy, Sale, all of these stocks are under pressure today. Meanwhile, what's doing well is a Cyient that's up 4%. Astral, a very strong set of numbers, good outlook from the management. That stock higher by 8.5%. Sarda Energy doing well, 8% uptick over there. It's Network, Godavari Power, Bharati Hexacom, Cyient, IFCI, Wockhardt. Wockhardt also very good set of numbers, 4% uptick coming in over there as well. Natco Pharma, Tata Motors CV, Ipca Labs, Titagarh Rail, these are some of the stocks that are doing well. Just taking a look at what the index is up to in terms of what the advanced decline ratio is when it comes to the Nifty 50, and we'll get that for you in just a bit. You've got 24 stocks in the red, 25 in the green, and one flat. That's the kind of move. So quiet split in the middle over there too. Hindalco, Grasim, Ultratech, ICICI Bank are your top losers from the Nifty 50. On the flip side, Tata Consumer, and in fact, the entire Tata group of stocks has seen a little bit of an upsurge after the sharp knock that it saw yesterday following Mr. N. Chandra's announcement that he will not be availing himself up for reappointment come 2027. Today, you're seeing some momentum back in Tata group of stocks. Tata Consumer is up 2.5%. Tata Motors PV is up 1.5%, looking good over there. TCS is also up about 0.8%. So some Tata stocks are doing well, followed by Tech Mahindra, Shriram Finance, BEL, Eternal, Max Healthcare ahead of its earnings. So that's the kind of move that we're seeing coming in. But shifting focus then, MSCI's latest India Index Friedrichs is in focus with 4 additions to the domestic index and no deletions. The small cap index, however, has seen 12 additions but 19 deletions, resulting in a net reduction of 7 stocks. Ashesha is here with more details on the rejig and which stocks made the cut. Ashesha.
Well, yes, so the announcement came overnight, and let's talk about the domestic fund, the MSCI Domestic India Index, where we have seen 4 additions and no deletions. Adani Energy Solutions, Billion Brains, we have Laurus Labs and Lenskart. These are the 4 stocks which have been added to MSCI India Domestic Index, and as I mentioned, there have been no deletions from this index. But we also have MSCI India Domestic Small Cap Index. Of course, this will come into effect from the 31st of August this year, where about 12 stocks have been added, 19 have been deleted. So net 7 stocks have been reduced from this particular index. We have Amagi Media Labs, Aether Energy, CleanMax Enviro, E2E, Patanjali Foods, Rubicon, Sky Gold, United Breweries amongst a couple of stocks which have been added to this index. And Orient Pro, CMS Infra, Enturer Healthcare, GMR Power, ICRA, Latent View Analytics are a couple of stocks which have been removed from this index. So small cap domestic India MSCI index has seen net reduction of about 7 stocks, while we have not seen any deletions, at least for the main domestic index India MSCI fund is concerned.
Okay, Ashesha, thanks for taking us through that. So, yes, some stocks that are in focus, additions like Ashesha was talking about. You've got Billion Brains, that's a grow. Then you've seen Adani Energy, Laurus Labs and Lenskart added to the MSCI India Domestic Index. It's interesting to talk about Lenskart today. Let's pull up the stock because at open, we saw about a 6 to 7% upswing for Lenskart on the back of very strong set of numbers coming in. Their overall volumes are up about close to 26%. India revenues up 30%. International revenue up 63%. 3%. So looking good on that front. Eye care is doing well for them. Testing as well as the eye care pieces that they've sold at 1.1 crore units also looking really good. The revenue was in line with our estimates, but it's a beat coming in on the bottom line, the EBITDA as well as EBITDA margin. And brokerages, Macquarie continues to maintain a buy rating with an unchanged target price of 650 rupees per share. But other than that, the entire slurry of brokerages, right from UBS to JP Morgan, Morgan Stanley, you've got CLSA, all of these guys have maintained their ratings, individual ratings on the stock. But there's been a consensus target price hike coming in after a very strong set of Q1 earnings. And the highest target has been given by UBS, that's 800 rupees per share on Lenskart. The stock currently at 602 and doing well in trade. While that's on Lenskart, let's take it across to my colleague Avi, who's joined us on the show with yet another list of all the buzzers to be watching out for in trade as we speak. Avi.
So let's have a look at some of the stocks that are buzzing in trade, starting off from Blackbox, that has received a mega order for an AI data center from a US hyperscaler worth 1240 crore rupees, and that is the reason the stock is seeing some strong buying inflows. Up next is Lenskart. As you mentioned, a very strong set of earnings for the quarter gone by, with the overall beat, EBITDA beat, margin and PAT performing very well for the company. The revenue was up 43%, the EBITDA was up 75%, while the profit increased from 60 crore rupees for the same period last year, now at 222 crore rupees. The international segment is doing extremely well for the company, growing at around 63%, while the domestic business grew around 33%. So international segment performing very well for Lenskart. Up next is Tata Motors CV, came out with a very strong set of earnings. The market was expecting a 10.3% margin, but they delivered a 11.3% margin, which is a beat on all the street estimates, and that is the reason the stock is up around 3 to 4%. The management has told that they've taken a 2.5% price hike on the 1st of July, and that is helping them offset the commodity cost inflation caused by the West Asia crisis. Up next is Astral. All the volumes for the quarter gone by have been flat on a YY basis, but they're still best in the industry. The revenue is up around 15%, EBITDA up 31%. The margins have also expanded by 171 bips, and that is the reason the Astral is up around 9%. Our next pick is Gujarat Fluorochemicals. So Nuvama has initiated a buy call on the stock and has given it a target price of 5694, raising it from its earlier 3,500 rupees. The management has reiterated a three-digit top line for the quarterly battery material revenue by Q3 FY27, and Nuvama is very bullish, stating that there are R32 contribution has beaten estimate by 22%, and the R32 is growing at 14.5% on a YY basis. So these were some of the top picks for the day.
Thanks so much for taking us through that. Yes, some of these earnings looking good. GSFC getting up an upgrade too. So looking very good on that front. In fact, we've also got Kunal who's joined us on the show. Before we get a little stock specific with Kunal, let's just get a view on the index. Kunal, at around 12 o'clock today, we saw good recovery from the day's low. We even managed to cross that 24,400 mark. But once again, now we're below it. And now we're even like struggling to hold on to that 24,350 thereabouts. How are you looking at the move that we've seen in trade today? Because at one point it was looking good, but we've also now again slightly slipped from the day's highest point.
Yeah, we have, but I would still believe that it's a decent market, because I think the key to the market in terms of performance lies in how the market breadth and the sector breadth behaves. And over the last, I think, a couple of days, even though the indices have taken a bit of a backseat or a marginal correction as such, but the market breadth overall has remained buoyant. We've seen the advanced return ratio at least remaining to be flattish on the positive side, for the overall market. The more important part is the kind of recovery which you're seeing for sectors and stocks. That, I believe, is the hallmark of every market recovery or the market internal. And today, I think, for example, you're seeing the comeback of real estate names, a good comeback from the IT stocks, IT majors, as well as good recovery on across many of the defense names. The PSU banking stocks have been doing very well. So when you have such kind of a construct of the market, I would probably believe that the overall undertone for the market remains bullish. From an intraday trading perspective or short-term trading perspective, I think I would probably use this 70-80 point dip for the Nifty as a good contra-buying opportunity. We've tapped back into a strong support level for the Nifty over the near term. The risk reward is positive. So even if someone has a view of another 4 to 5 trading sessions, I think it's a good time to try and look at contra-buy on the Nifty.
And Kunal, what would those contra-buying opportunities be? Any pockets, any stocks that look good?
Yeah, there are a few of them. So I'll highlight 2 buy calls. The first one is actually buying DLF. After quite some time, the stock making a very strong comeback of sorts. It's on the verge of a triangular pattern breakout, just about that 670 mark. So I'll probably wait for another 5-7 points on the upside. Once the stock confirms a break above 670 levels, would look out for targets in the range of at least 700 to 705 for DLF. Stop loss to be kept at 645. The second would be a buy on Bharat Dynamics. This could also be a very interesting chart over the near term. It's heading towards a breakout about 1370, 1380 mark. So would look at a buy with a target of 1440. Stop loss to be kept at 1340.
Okay, DLF and BDL both looking good on the charts to Kunal. Before we slip into a very short break, Kunal, just want a quick view on HDFC Bank. I was just taking a look at the move today. It's slightly flattish with a hint of red, but year to date, it's already lower by about 25 to 26%. Do you believe the worst is over on the charts, at least for HDFC Bank? Good time to enter?
Doesn't look like, Sneh, because most of the times the bottoms are generally formed on two fronts. Either there is a big panic, a kind of a sell-off into the stock price, or if there is a zone where the stock prices go into a very steady and a stealthy accumulation as such. We are seeing neither of the patterns established for HDFC Bank. The stock is neither seeing any kind of a major panic sell-off for itself. Neither I think the stock has seen any kind of a volume accumulation where you see that the stock prices, even if it's drifting lower, the volume start to increase up higher. So in this kind of a scenario, it indicates that the stock has not yet bottomed out completely. And maybe I think traders are just about taking a bit of a backseat, waiting for the news flows to emerge into the stock price and then try and take a call. So looks like that I think the stock would take some bit of more time to try and show strong signs of bottom formation.
Okay, that's on HDFC Bank. On that note, we'll slip into a very short break. Keep the conversation going with more buzzers, get you a more balanced fundamental and technical view on both or some of those names on the other side of this very short break. Stay tuned. Back with closing trades, and you're still catching us live from the Suzlon studio. Thanks so much for staying on with us. Before the break, we were talking about a bunch of buzzers, the stocks in focus today on the back of earnings, brokerage updates coming in on some of those, a bunch of target price hikes coming in on Lenskart. We've also got a view on the market from Kunal as well as a view on HDFC Bank. But Meryl is joining us on the show with a list of yet another basket of buzzers today, buzzing neither on the back of news flows or earnings. Meryl.
That's right. So these are some of the stocks which have seen buzzing in trade today. Starting first with Thyrocare. Now, a promoter over here, Docon Technologies, has sold a 9.9% stake in the company in a deal valued at 793 crores. The average price over here was at 624 per share. And following the stake sale, while Docon remains to be a promoter in the company, its holding has come down drastically from 61% in just June to now holding 51% of the company. So while promoter remains the majority shareholder, the sharp reduction is why we're seeing the sort of selling pressure in the stock today on account of the excess supply in the market. JTech India is another stock in focus. They've reported a mixed set of Q1 numbers. Revenues have grown 27%. However, EBITDA as well actually grew 23%, but profit, that's what seems to have dropped up to 45.5%, reaching 6 crores. Margins also slipped marginally. Aditya Birla Real Estate also saw revenue growing 30% to 189 crores, but losses for the company has widened, reaching 38.5 crores. And finally, Mishra Dhatu Nigam is another stock in focus. The company has received an S400 approval from GE Vernova, which is a significant validation of its testing capabilities and a strong positive development for the company, which is why we're seeing such strong moves in that stock as well.
Thanks so much for taking us through that. That's an interesting one, Midhani. It's a 9.25% uptick. Kunal, do you track the stock? How are the charts looking? Because very sharp uptick coming in on that one today.
Yeah, it's a very interesting chart. I've been tracking the stock over the last, I think, couple of years, and specifically at a point when the stock was priced almost at 250 towards 500, I think, or 550 was the high for the stock price in 2024. Post that, I think we've seen a decent 30-35% correction for Midhani. The stock, I think, had corrected from those levels towards 300 odd mark. Now it's on the path of recovery. Interestingly, what's happened is that the stock in the last few months is trying to retest this levels of 450 or rather reclaim this level of 450. Hopefully, I think once we see a monthly closing about this 450 mark is where I would expect a big recovery for Midhani. So it looks interesting, and the fact that the stock is near a big breakout, specifically on the monthly charts, I would sense that the medium-term prospects open up to be quite positive.
Okay, stock doing well and the outlook is also quite positive on the Mishra Dhatu, now close to 10% in trade today. Let's also welcome on board Mr. Deepak Shenoy of Capital Mind Mutual Fund. Deepak, hi, good to be speaking with you. Good afternoon, first of all. Give us your reading on how you're looking at the texture of the market, because this week so far has been absolutely subdued and we seem to be stuck in a very narrow band. How are you looking at the market overall?
So I think overall we not had major run up, compared to let's say what we've seen in the US and some of the other markets so far. But the market hasn't gone up too much or down too much. I think it's kind of gauging time for now. The main thing is the results seem to be quite good. We're seeing mid caps, small caps perform extremely well in terms of results. We're seeing some movement in terms of large caps as well, more than 15% median earnings growth in the top 100 so far. I feel that this is actually quite a good result season compared to what I expected because of the Iran issues. I thought we'll have a subdued quarter, but we have got a significantly high earnings growth quarter, nearly 20% plus in mid and small caps. So at some point, the market will start paying credence to at least this factor that the fundamentals are decently in place. We will see a lot more, I think, in the next few months. But the markets are just, I think, biding their time. Maybe they're waiting for interesting movements that are happening internationally. There's some issues around US debt, there's issues around Japanese debt. But in general, we haven't seen major inflows from FIIs or major outflows of any sort. So I would say this is just one of those you can build positions in stocks that you like kind of season.
Sounds interesting, and here's looking forward to that uptick in markets that we're all waiting for. But Deepak, give us your sense on which sectors are looking good, because now on a daily basis, we're seeing very sharp sector rotation take place in the market. On one day, you've got PSU banks that are doing well. Then they're extremely under pressure. On the day where the market is overall under pressure, you've suddenly got an IT index that is taking the lead from the front. How are you looking at sectors right now? Anything looking attractive particularly?
So I think core at some level, manufacturing, even some form of auto ancillaries, we're seeing some movements. And these are not one day, 2 day. I'm looking at like 3 months, looking at earnings, looking at growth in some of the mid-cap banks as well. All of these are positive. They've seen some kind of movement upwards. The large cap banks are not doing very well. I think that's a place where you're not seeing great results as well in comparison with the mid caps. But I would say here the mid caps are where the attractive part of the universe is in the banking and the financial sector. It's also happening in mid cap manufacturing, in mid cap pharma as well, is where you're seeing some moves. And I'm looking at more from a combination of both results being good and the stock market giving some presence to them. IT is, I think it's a very volatile sector. It's still has more downtrend issues than uptrends. But I mean, again, it's a risk-based thing. So if you don't, if you're a person who's a risk taker who wants to play for a rebound, then there will be some more rebound that will likely to happen in IT than will probably happen in any of the other sectors, because IT has been beaten down so much. Overall, I would say, till November, I don't expect a major change. There should be some interest rate based moves abroad as well. And that will kind of, lag India. But this is a great time to build positions, because the next 5 years, I think, is fairly good for India in the longer term perspective. Not really bearish, but not extremely bullish as well.
Understood. Just taking a break from the market right now for a bit, just addressing some macro numbers that we're getting on the bottom of the screen. We've got the July trade data that has trickled in. Merchandise trade deficit of close to 32 billion is something that we're seeing, which is the highest since January, and this is slightly concerning on the macro front. Merchandise exports have come in at $44.24 billion, and yeah, that's the kind of move that we're seeing. Merchandise exports, they've seen an uptick of about 19.5% on a year-on-year basis. Total merchandise exports have reached $129.5 billion, and that is the first print that we are getting of these numbers. The services imports are at $18.5 billion and services exports at $35.9 billion over there. So the imports have seen a rise of 17.5% on a year-on-year basis, but the exports have risen 19.6% year-on-year, slightly more than the increase that we've seen in imports. So first, on that first cut, that looks good. And the July import number at $76.22 billion, July exports at 44.2. So yes, on a monthly basis, we have seen an export deficit coming in, and the imports have overtaken the exports by a lot, which brings your July trade deficit to $31.9 billion. The estimate was 30.5, so slightly ahead of what the street was estimating when it comes to the trade deficit for the month of July, and that has widened slightly compared to the street estimates and also on a year-on-year basis. And no reaction as of now, nothing much on the market. We continue to be about 0.3% lower on the Nifty 50, and the trade deficit has now widened to an 8-month high. So that is something that we are going to be watching out for on the economic front. But shifting focus then, talking about some buzzers in trade from the Nifty 500, we've seen good moves coming in on an Astral today. Very good move coming in on Netweb Tech. And the other one to talk about is Lenskart. Good set of numbers. We were talking about that stock earlier. Kunal, I know very recent chart history for the stock, but can you give us a sense of how Lenskart is shaping up? Because back-to-back blockbuster quarters is something that the stock has seen. At open today, that stock saw a surge of about 6 to 7%, but has since simmered down. Can you give us your outlook on the charts?
Yeah, it's a very decent chart because even with the limited history for Lenskart, around 8 months, 9 months approximately for the stock price, it's done decently well because from a point of 400 where the stock started off, it's gradually moved on to that 600 plus levels where it tested today. Now the only concern, of course, on the charts today is that the stock opened at a high, the volumes have been pretty much on the higher side, and from those 620 odd levels, the stock has corrected. Generally, we call this as a point where the stock tops out or at least shows some bit of fatigue or consolidation. So from a very immediate perspective, time perspective, I would believe that Lenskart could go into very marginal correction, say 15-20 points approximately over the near term. But I sense that closer to 570, 560 could be a very good opportunity for traders who missed out on the trend earlier. The stock is still trending out to be on the upside on a medium-term basis. It's just on the short-term charts, and specifically after today's candlestick move and the volume move, there could be a bit of a price cool-off into the stock price going forward.
Okay, we're going to be watching out for that one on Lenskart. But on that note, time to slip into a very short break. We'll have Deepak and Kunal joining us once again on the other side of this break. Stay tuned. Back with closing trades, and you're still watching us on ET Now live from the Suzlon studio. Thanks so much for being on with us. Just shifting focus to some numbers that we've been getting. Max Healthcare is flashing on the bottom of your screen. We'll be addressing that in a bit. Revenue is up 9.8% for that stock. We'll get you more numbers from Max Healthcare. A minute ago, we've got numbers for Jubilant FoodWorks as well. The revenue is up 9.2% on a standalone basis. Net profit is up 4.3%. EBITDA growth of 10.2%, and EBITDA margins have seen an expansion of close to 20 bips. All in all, seems like a very inline set of numbers coming in from Jubilant FoodWorks, and absolutely in line with what the street was estimating. But so in the last couple of minutes, we've seen a sharp green spike coming in on Jubilant FoodWorks, but that stock is higher by about 1.5% as we speak on the back of these numbers. We'll be getting you more details on the same-store sales growth and some more numbers once we have them. But for now, we've got the numbers for Max Healthcare that's flashing on the bottom of your screen as well. The revenue growth over there is at 9.8%. Profit has grown 4.5%. The stock is absolutely flat right now in terms of the kind of movement we were seeing before the numbers came in. Or in fact, rather, that's the updated chart. We've seen a little bit of a cut coming in on the stock, 1% lower for Max Healthcare. Remember, a couple of minutes before the numbers came in, that stock started dwindling towards the red and has seen a little bit more pressure right now. 0.8% lower coming in for that stock for Max Healthcare. The EBITDA has grown by 14.3% at close to 600 crore rupees. That's the number coming in for Max Healthcare. We've also got numbers for Solar Industries, and it seems like a good set of numbers because that stock is doing really well. We've seen a sharp spike on Solar Industries. The revenue is up 70%. PAT is up. In fact, it's close to doubled. It's a 93% uptick coming in on the PAT. Similar 90% uptick on the EBITDA. And the EBITDA margin has also expanded to 27.7% compared to 24.8%. So close to 300 bips of a movement on the margin front too. And that's Solar Industries for you. Sharp spike in the last couple of minutes, a 4% uptick on that stock. Deepak, coming to you on Jubilant's numbers, and I just want to get a view on you from the entire QSR space. This time around, Westlife has done well. Devyani has been a positive surprise. You've got Restaurant Brands Asia that has done exceedingly well for itself. And the first take on Jubilant at least seems like it's an inline set of numbers. Do you believe this recovery is finally here for some of the QSR names? And more importantly, do you believe it's here to stay?
So I haven't yet tracked too much of these QSR numbers, to be honest. And I think while some of these stocks are quite expensive from a P multiple perspective, this is the first time they've actually shown some growth. Perhaps I haven't seen the numbers, but I would say in general, I would say they have been a little expensive. So these are more technical or momentum plays than they would be or based on fundamentals. Don't have any comments on the individual stocks, but in general, you will find that a stock that has a high PE, you would expect high earnings growth. And if there isn't, the stocks tend to correct a lot more. Then they tend to go up if the earnings are, in line or close to estimates. So I would say you got to just be careful over here about how the stock prices react versus how the fundamentals do. I unfortunately I haven't seen the numbers closely, so I don't have any comments on the individual numbers.
No worries on that front. That's the note. That's the uptick coming in on QSR as well. But also give us your sense on how you are looking at the metal space, because of late we've seen quite the swing coming in over there. Globally, we've seen aluminum prices have also seen a very sharp uptick. Yesterday, you had names like Hindalco, Nalco that were doing well in trade on the back of this aluminum uptick. Deepak, how are you looking at the metal space?
So metals, I think they've done a recent run recently. We've seen some of them retreat quite substantially from their peaks, and some of them are related to supply. So there is a return of supply coming in aluminium because some of the supply that was closed because of the geopolitical concerns and because of an energy issue earlier, uh, have started to see some opening up. There is also, copper has this thing of it rises and then more supply starts coming because copper is abundant, and then it's a cyclical thing. So the cycles last maybe a year, maybe sometimes 6 to 8 months. So I would say in general, the metal space has seen a bit of a run up, and you have to treat it as a cyclical, and then the ones that are in the top of their up cycles, you're probably not going to see a lot more in them. Gold and silver are seeing some kind of a return from their lows, but we'll have to see if there is any more, of a deeper crisis that happens that drives more demand here. But I would say in general, this is more of a bear market run on gold and silver because they're down about 25, 30, 40% from their highs. So I don't really see a major chance of a massive up move in both of their prices meaningfully here. So, and they're not industrial metals. So there's not that much of a investment led demand in many of these sectors, in gold and silver.
Afternoon. How are you looking at aluminium as such? The Q1 numbers were better. There was better, EBITDA per ton realization which came in, but of late there has been softness in the prices as well.
Yeah, so I mean, actually, the problem is aluminum stocks lag the aluminum prices. What happens is you reprice your aluminum stock inventory according to the price at the end of the last quarter. So therefore, obviously, your results look slightly good. But if prices continue to fall, both forward realizations and inventory repricing will happen at lower levels. So therefore, there will be a retreat in earnings. So you would typically find that aluminum prices in the international markets will perhaps lead the trend in stock market returns of these stocks. Luckily, we've not had too many aluminum players try to announce way too much capex in the aluminum sector. But you have to understand here that if aluminum supply comes in because of plants that were shut abroad, resurging or coming back to life, then you would not have a great aluminum price realization going forward. And that is where there may be a problem, because these are some of these stocks have run up to extremely high PE values as well in an upcycle, which is usually rare. So you would not want to venture too deeply into this as a long-term story. It's more cyclical, and I don't think we're at the beginning of an upcycle here. I think we're more towards the end of it.
How do you look at data center plays here, whether it's in form of capital goods or power ancillaries?
So I think power ancillaries does make a difference, because power is, I think, usable not just in data centers. Everywhere in the country, there will be a demand for power, whether it's because of industrialization, it is because of generally more focus on manufacturing and so on. So there is a multiple areas of focus that you can actually build a position on. But you would not find the same in terms of infrastructure, because they are more like one-timer plays which happen on a project basis. So you'll see some bump in revenue right now, but eventually, if the data center plays do not generate a lot more data centers going forward as well, and data center prices are likely to come down quite substantially, because as the supply of memory, as the supply of chips starts to increase, you're going to find that some of these elements will not be able to command the price points that they do on a per hour or per token kind of basis that we're seeing right now. And that will dull the investment climate for data centers going forward. So good play right now, maybe not last more than a year and a half from here. That's my take on it.
And so you're also seeing the counterplay of IT also coming in that sense?
Yeah, I think IT should come back at some point, but right now the issue in IT, at least in the large cap IT names, is that their battles with AI and the general, fear that seems to be around the marketplace of whether how much of the automation can be done by AI, how much of it will have to be outsourced and not, and budget constraints, because companies abroad have been pausing because of all the geopolitical and then generally tariff or something else concerns that are happening. New projects are only trickling in, but I do feel in the long term they will make the best out of it. The problem is the long term can be really long away. So one good thing about is usually prices lead fundamentals in some of these beaten down sectors. So you might be able to actually get an idea of which stocks are starting to do well. Some of the large cap IT stocks have actually announced decent AI based moves as well. So that there may be a good longer term future in there, but don't expect anything for the next 6 months. I don't think contractual increases are happening meaningfully in the next 6 months. Things may start to improve next year, perhaps in next year's budgets as well.
Deepak, thank you very much for joining us today and giving your perspective on various sectors. Thank you. We also now have Arpit Beriwal joining us from Motilal Oswal Financial Services. Arpit, hi. How are you looking at the market at this point, especially how the Nifty is moving?
Very good afternoon to all. So if we see in indices, Nifty, Bank Nifty has been very sluggish. And if we see, in fact, Nifty from last few days, we have seen a counter trend where we have seen the index corrected from 24,700 to almost 24,300 levels. And even if we see that overall, if we look at the weekly setup and the daily setup, so index is forming on the daily setup low rise, low structure. Immediate basis, Nifty is finding some pressure here around 24,450, 24,500 levels. So look at the overall overall setup wise, Nifty is likely to be in a range between 24,250 to 24,500 levels. Once it closes above 24,500, then only you can see some momentum towards higher levels. Talking about Bank Nifty also, so Bank Nifty also has been stuck in a range, a broader range between 57,000 on the downside, whereas on the upside, 58,200 levels. However, if you see the real action is in the broader market where the mid caps are outperforming, so it would be more of a sector and a stock specific approach rather than an index based approach market currently.
And Nifty Bank, how is that looking to you today?
So looking at the Bank Nifty also, if you see Bank Nifty weekly chart from the last almost 8 weeks, it's trading in a broader range between 56,500 to 58,500 levels. So there is no major trigger point. If you see from the lower levels, you're seeing buying interest near 57,000 levels, but at the same time 58,200, 58,300 levels as the major supply zone. Because of which the private banks, they are the underperformers. Some buying is seen in the selective PSU banks, but the private banks has been the dragger. So our sense is that Bank Nifty is also likely to oscillate between this broader range between 57,000 to 58,250. Once it closes above 58,250, then only you can see fresh momentum towards 59,000 plus levels. But till that time, index is likely to win this broader range of 1,000 points.
Coming in on the index and some of the sectors as well. But on that note, viewers, time to slip into a very short break on this edition of Closing Trades. On the other side, we'll be putting the spotlight on a corporate conversation with the management of Star Cement on their earnings. So stay tuned and we'll be right back. Back with Closing Trades and on to an ET Now exclusive. The GMR Group is aiming for 10 million metric ton as India aims on having 10 million metric ton air cargo capacity by 2030. Let's go across to Kuldeep and hear an excerpt of this conversation.
This 10 million metric tons that we are talking about is definitely something which is achievable. India today is a little less than 4 million metric tons, but we are looking at 10 million. This is an aspirational target, ambitious target for all of us. The way to do it is we need to collaborate. We need to firstly have the right infrastructure, which which is good, which many of our airports and cargo terminals have taken the lead to create that capacity in the country. Today, as we speak, we may be in the range of about 6 to 7 million metric tons capacity available in the country already for handling of air cargo. What we need additionally is air capacity, and which is freighter capacity. And I think this is where we've been talking to the government, putting our requests over there, that India really, if it has to grow air cargo, we have to get connectivity into tier 2 and 3 cities. Many times, these tier 2 and 3 cities will have cargo which is only like freighter cargo. It will be skidded cargo, pharmaceuticals, or sometimes it may be, perishables or machinery which needs freighter uplift. So, there is freighter capacity which is required in the tier 2 and 3 cities, where there was an earlier policy on the which allowed a freighter to go into a hub and a second airport. That was, some time back, not being done. Now we are asking for that to be restored, which again gives a great amount of capacity available to the Indian manufacturers. You got manufacturers exporting, they get better value for the price, the economy thrives. So air cargo plays its part to be a catalyst for the economy.
Sir, we have been seeing global headwinds. I mean, the West Asia crisis has been going on. So what are the challenges that the air cargo sector this has been facing, and how to navigate those?
So I think this West Asia crisis is, while on one side it has had impact, because of the fuel prices, getting impacted, insurance costs, and also time getting affected. So it has some adverse effects as well. But on the other side, I mean, what has really been good is if you see air cargo has risen to the occasion to provide a solution. And that's where the options are available. What really we need to do is India needs to recognize its position as a global supply chain leader. Supply chains are being rewritten, and India needs to emerge, take its position as a global hub in the middle of these supply chains.
Okay, that's the word coming in from GMR Airports. Let's shift focus and talk about Star Cement. More or less an inline set of numbers coming in from the cement major in the quarter gone by. We've got Mr. Tushar Bhajanka, the Deputy Managing Director at Star Cement, joining us on the show. Mr. Bhajanka, hi, good afternoon. Give us a sense of the way you've seen price improvement in the northeast and east over the couple of months in the quarter gone by, and that has aided your realization in quarter one. If you can tell us, how have pricing trends been over the last last few months, and you expect a solid price improvement post-monsoon this year?
So right now the pricing is a bit stable, even though there are floods going on in Assam and many other states in Northeast. Post monsoon, because of the cost escalation which have taken place because of the war, I do expect that some of it will be passed on in the pricing once the demand picks up.
Hmm, cost too has risen, both variable and fixed. Where do you see coal prices headed?
So I think the coal prices have gone up mainly because of the unavailability of rakes, uh, of coal allocated to the cement industry and various other industries. I do expect it to stabilize in quarter two and not see a further escalation in these costs.
Okay, and Mr. Bhajanka, can you give us a sense on packaging costs? And before that, let's also talk about some other costs, because overall costs for you too have risen, both variable and fixed. Where do you see coal prices headed from here? Let's talk about those prices first.
So as of now, the PP bag prices have not gone down. They're still at the higher level that they were in quarter one. It really depends on how the war turns out and how swiftly are we able to, get to the post-war situations. Till now, the raffia prices and the PP granule prices are still high. So I do not see that the prices of PP bags are going to fall anytime soon.
Hmm. Uh, Also, if you look at the packaging cost to rose in Q1, FY27, I believe they have now started normalizing. How do you see packaging costs?
So I think in quarter two, the spread and the margin, of course, are going to be on a similar level. Uh, because right now also in quarter two, there is a muted demand because of the rainfall and the floods in Northeast. But from quarter three onwards, I do expect the demand to pick up, and with that, the margins to also improve a bit. On a year-round FY27, I do expect the margins to be at about 1600 rupees per ton.
Okay, and Mr. Bhajanka, on your capacity from 9.7 metric tons per annum, currently you aim to increase this to 17 by FY29 end. Can you help me with what the total capex for this is going to be and how that capex is going to be funded?
So immediately we will be starting our project in Rajasthan and in Haryana and expand ourselves to North India. I think this is a 5 million ton capex that we will be taking up in the next 2 years. We do expect to fund this expansion with our own accruals as well as some amount of debt.
Hmm. And in any inorganic acquisitions on the annual, or will this capacity expansion fully come from organic route?
This expansion will come fully through the organic route. I think also the expansion that we plan in Northeast will of course be organic. If there is any opportunity of inorganic growth, we will definitely explore it. But right now, we are not thinking of any inorganic growth opportunities.
Understood. Nothing on the annual for now on the inorganic front. And lastly, Mr. Bhajanka, is the entry of Shree Cement, Ambuja and JK Lakshmi into Northeast a concern from a competition standpoint? I'm asking this because I just want to understand if this is exerting any pressure on the price increase.
So I think for any of the players who are planning to enter Northeast, I think because of the terrain and because of the monsoons, the pace at which you are able to commission plants is a bit slow. So I don't think that effect is happening right now on the prices, because that may be after 2 years or 3 years whenever one enters. So I don't think the current pressure on the market or demand is because of that.
Okay, understood. And thanks for that perspective. Good to be speaking with you today, Mr. Bhajanka. Thank you so much for your time. Because I was the management of Star Cement, not looking at any inorganic growth opportunities as of now. That's the takeaway from the conversation. But on that note, it's time to slip into a very short break on this edition of Closing Trades. Trades will bring you the last leg of the trading session. On the other side, bring on board our experts once again. Stay tuned and we'll be right back.
Welcome back to Closing Trade. We still have Arpit with us. Arpit, how are you looking at some of the banking stocks like an SBI or an ICICI Bank today?
If we see overall banking space, as you discussed, it's stuck in a range. If you talk about SBI also, post its results, some move was seen towards 1120. But if you see on the daily and the weekly setup, still it's trading in a range. So on the weekly setup, it retested its previous breakout zone around 1050 levels. On the upside, 1100 is the hurdle levels. So slightly bias would be positive in SBI with support around 1050 for an upside move towards 1111. If we talk about ICICI Bank as a whole, if we see overall on the weekly setup and on the daily setup, the stock is slightly in the sideways with momentum missing at the higher levels. So I think level wise 1430 is the major hurdle level immediate basis. On the downside 1380, 1390. So looking with comparatively SBI and ICICI Bank as well looks better. As if you see PSU banking, PSU bank is relatively strong if you see from last couple of days, whereas private banking is still underperforming. So better to go with SBI for long bias for 3 to 4% upside move.
Biggest gainer is L&T, that's holding up the index at this point. How's that looking for you?
So if you see L&T overall, the chart structure from the weekly setup, the stock is forming higher highs, higher lows from last 3 weeks. On the daily scale, it is holding above its 50 DEMA, and I think momentum can be created above 4100 levels. So overall, the bias will be positive with support around 13 and 50. The stock can head towards 4120, 4200 positionally, but overall buy and dip counter till it holds above 13 and 50 levels.
Okay, that's the take coming in on L&T. On that note, thank you so much for your time, Arpit, and we'll let you go. But shifting focus then, GMR Airports has announced strong Q1 with loss turning to a profit this time and clocking record international passengers in 4 years. Sajid caught up with the management for their growth roadmap and the flight path ahead. Here's a snippet of that chat.
Broadly, our total income increased about 23% year on year from the last quarter in fiscal 26, and our EBITDA increased by about 22% to about 1568 crores. So on both parameters, we have shown good growth. The PAT we have reported a PAT about 148 crores for the quarter. And like you rightly said, this is the fourth consecutive quarter in which we are reporting profit. And this is in line with our guidance, which we started at the beginning of fiscal 26, that fiscal 26 will be our first full year of profitability. We have met with those guidance, and that momentum continues in our business. And as we speak, this is after certain our guidance in our Q4 call is that in the first half of this year, the aero traffic will be a little muted because of the geopolitical issues that are there. Plus, also one of the airlines rationalized their traffic given the feedback that they got from the regulator. But in second half of this current fiscal year, traffic will come back, and we expect again to get into a growth plane. Delhi will grow at about 6-7% year on year from a traffic perspective, and Hyderabad will remain flat. That's from a full fiscal year perspective. That's what our guidance is.
Interesting. Give us a sense of the aero impact that has happened because of West Asia crisis. And have you seen traffic going back to normal there, or you're still seeing some disruptions which are there? And unless the West Asia crisis gets resolved fully, the traffic will not go back to that higher growth level, especially international traffic.
So honestly speaking, yes, for the first few months, there was a degrowth, both at Delhi and Hyderabad. Hyderabad got impacted more because for Hyderabad, Middle East is one of the major international destinations versus Delhi, which is actually a global airport, and so it was Delhi came back pretty quickly. Traffic that was lost by Indian flag carriers, that was quickly lapped up by some international carriers out of Europe, and including your Middle East carriers, they had also lost out on it. But traffic came back as far as Delhi is concerned on the international side of it. Hyderabad, of course, took a little longer period of time to come back. A lot of workers go from that part of India to work in the Middle East, and also Middle East is a major hub for travelers from Hyderabad to into Europe or into the US. So that had impacted, and there continues to be little softness on the international side in Hyderabad. But like I said earlier, it's mostly because of rationalization of flights by one of the Indian flag carriers. Uh, the advanced forecast that we now look at from carriers is that in the second half they will more or less make up for the lost traffic out of the Hyderabad airport.
You mean to say Indigo will be able to restore the kind of aircrafts back to normal because that's a hub for Indigo, right? In that sense.
Yeah, Indigo, of course, is a major carrier in India, having more than 65 odd % market share. But also Air India. Air India, you see, had also cut down a lot of their aircraft movements, both domestic and international. And both have indicated that in the third quarter onwards, and especially Air India, they have indicated that they should go back to normalcy from September 1st onwards. So that gives us, the confidence that in the second half of the fiscal year, the traffic should be back to its original form.
Are we to say that your strategy for premiumization is paying off given the fact that yields are going up, non-aero revenue mix is also increasing, and that would be the strategy going forward?
Yes, we articulated this strategy about 2 years back that we want to further the hub and spoke model. We want Delhi to be the international hub for India. We want Hyderabad to be the regional hub, and I think that strategy is playing out. You rightly pointed out. More than 25% of traffic that goes from Delhi is now international. And increasingly now it is becoming a hub where, right now, for example, the travelers from Banaras, Varanasi to Delhi, and from Amritsar to Delhi on Air India flights, they just need to check in and do their immigration at the point of embarkation, which is their city, and they seamlessly can connect to international flights from Delhi. So that process has already begun. This process will only gain momentum as Indian flag carriers they expand their international footprint. Air India, especially because they already have the slots available, as they come back with their new aircrafts and come back with a vengeance. I hope so. And also Indigo, as they start their new international operations in the new form, in compliance with the local regulator as far as the cabin crew usage is concerned. I think we are quite well positioned to further create premiumization of our traffic in our portfolio.
Back with closing trades right here on ET Now, and let's just take stock of where the closing trades are settling in as we get into the last lap of today's trading session. And it's been one of those very, very quiet days. In fact, the quietest of them all. We're closing in absolutely flat for the day, at least on the index on the futures, 24,467. While, yes, there are names like a Godrej Consumer Product recovering somewhat from yesterday's deep damage, Oberoi Realty, which is holding up 3.5% as we speak, Concor higher by 4%. You've got a Solar Industries up 8% as we speak right now, and Astral, which continues to be the star performer today, a gap up, and that only gotten built into. You've got Astral now holding up 9.6% in trade on the futures as we speak. It's very peculiar because if you look at the list of losers, it's pretty much a reverse action from yesterday. The top movers from yesterday, that's Nalco and Force Motors, are your top losers today within the F&O markets. Nalco is down 4.25% and Force Motors as well down 4.25% as we speak. Of course, there are others like a Hindalco, which was also a gainer, by the way, yesterday, a GVT&D and Page Industries, which has also fallen about 3% in trade as we speak right now. But we've got Aditya Shah with us and Kunal too on the show. Kunal, let's revisit some of these aluminum charts from yesterday. Both Hindalco and Nalco reversing, but directionally, do you think they're still headed higher?
Yeah, I think directionally these stocks are still headed up higher. Over the last, I think, few days, we saw metal stocks participating quite well. And on the back of this, Hindalco and Nalco, I think, had done very well for themselves. So to recover after a 20% hammering the stock had received in the last 3 months, and then to try and cover this this correction of 20% to try and cover this and come back towards 10% to 15% rally for these stocks, I think it's one of the standout features for both of the charts. I would still believe that at current levels, Hindalco still looks very strong. The stock has formed a base around the 1,000 mark. Nalco specifically, the stock just around that 400 is a breakout zone for Nalco over the near term. So I would sense both of these stocks looks attractive. Maybe I think over the next couple of days, if the dip intensifies a little bit more for these stocks, could be a fresh trading opportunity on the buy side.
Aditya, we also have Aditya Shah from Hercules Advisors joining us. Aditya, how do you look at some of the metal pack today?
I don't have a particularly positive view on the metal pack, so I will rather focus on the domestic economy stocks rather than going after the metals.
Okay, that's Aditya's view right now on metals. Having said that, of course, today is a lot about earnings reactions as well. You've got an Astral, for instance, up 9.6% as we speak, and I think there are brokerage notes as well coming in on this one. Grasim, even though the commentary from the conference call yesterday with regards to the paint segment is positive, but not seeing much excitement on that stock. In any case, it's low volume largely. And some of those Tata Group names are the ones which are making a turnaround. A Tata Consumer, Tata Motors PV, TCS, holding out in trade. And in fact, these are some of the top performers on the index. But Aditya, just wanted to get your sense in on the Tata Group stocks, while the uncertainty now still prevails about who's going to be replacing N. Chandra as the chairman of Tata Sons. But that said, within the Tata Group of names, where is it that you're finding investor confidence to buy afresh at these levels?
Companies are really very strong companies and in fact market leader in their own segment. Of course, Chandra had worked a lot on turning around some of these companies like Tata Motors or the Tata Chemicals. All of these companies have seen a massive turnaround over a period of last 3 to 4 years. Right now, particularly per se, something like a TCS looks interesting to me. The stock has been beaten down really, very badly. So that is one of the companies that I am concentrating on. Something known as Tata LLC also looks interesting to me, given the valuation derating that all of these stocks have really taken. From my perspective, companies like Tata Consumer or Trend, they are great businesses, but trading at a very steep valuation. So from my perspective, only the valuation stops me from investing in these companies. However, they will continue to do well over the next 5 to 10 years.
Aditya, also if you can give us a sense of some of the consumption stock, Tata Consumer, we're seeing some uptick on Tata Consumer today in today's trade actually. How are you looking at that? Tata Consumer, Tata Motors PV, Eternal, some of the consumption pack is up today?
So as I said, all consumption stocks are linked to the domestic economy, and that the economy is roaring, the economy is doing pretty well. So from my perspective, companies like Eternal, where Blinkit is firing on all cylinders, they will continue to do extremely well. Similarly, Tata Consumer will also continue to do extremely well. But purely from a valuation perspective, all of these stocks are really very expensive. My top pick remains a pseudo consumer company, which is ITC. A lot of problems, a lot of negatives have already been priced in. And looking at the dividend yield, I think that is one of the stocks where we are invested.
Right, okay, that's the take coming in right now on the FMCG spaces. Kunal, with yesterday's knee-jerk reaction on Godrej Consumer, given Sudhir Sitapati's stepping down, would you say the most of the damage is now behind us? I mean, it's a good 3% uptick on the stock today.
It's a decent 3% uptick, but what we look out for is a bounce where the stock at least crosses back about the swing high from where the sell-off started. So, for example, yesterday the stock made a high around 955, 960 approximately on the spot level. So we need to see a breakout of that 955, 960 barrier for Godrej consumers to start to look very attractive on the swing basis and to try and fill the gap. But the more important part is that the volumes which had happened yesterday, the volumes today are almost 1/3 to 1/4 of the volumes which have transpired today. So it's like a low volume bounce the stock is seeing today, not too much of participation comparatively with what happened yesterday for the stock price. So that could be another reason why I would probably believe that it's better to wait for a confirmation rather than jumping into this 3% bounce. If the stock falls below the 900 levels, say closer to 870, 850 mark, that could actually be a very good point to go for a contra buy.
Okay, that's a contra buy from Kunal on Godrej Consumer. Just looking at some of the other movers, Eternal is bouncing up today, 320 thereabouts is where that stock is nudging. BEL, of course, is holding higher. L&T is not looking bad. And then, of course, there is the likes of an Asian Paints, iSure. These are all names which continue to hold out in trade, as was the case yesterday as well. Just looking at where the healthcare names are, because remember yesterday it was really all about that parliamentary standing committee and their recommendations on how hospitals should actually revise their tariffs, and that really led most of these stocks lower. Apollo Hospitals came out with an excellent set of numbers, clarification as well on the parliamentary standing committee's recommendations. And then today you're seeing a much sedate move come by on most of these names, although Apollo Hospitals has gone a little soft after what looked like a strong start for itself. Let's revisit what a Fortis, Max as well, the more actively traded names from within the healthcare space, what these stocks are up to in trade. But Aditya, curious to know, where is it that you stand on healthcare now?
So from my perspective, I'm positive, particularly the pharma side of the market. Even the hospitals companies like Yatharth Hospital reported really very good set of numbers. Apollo will also continue to do well, but the stock is really very expensive for me. So from my perspective, hospitals, of course, the government coming in and trying to cap movement limit and other diagnostic charges is negative, but we've known that hospitals do find ways to skirt these charges per se. So from my perspective, any dip will be a buying opportunities. Companies like HCG, Yatharth, in also companies like Kims. These companies will continue to do well as time goes on.
Yeah, the view is pretty much divided on this entire proposal. From Max has one view and Apollo has another. As the healthcare sector is in focus after parliamentary panel recommended capping hospitalization cost. We earlier spoke to Sunita Reddy, managing director at Apollo Hospitals, over this. Listen to what she had to say.
No, I think the big picture takeaway is that it has clearly said that 5% of GDP will be healthcare, and currently it's less than 3%. So, in that lies an opportunity for us to do more. As we all know, the structural demand for healthcare is very strong. And in terms of pricing, we are willing to be, with digital, everything is transparent and the pricing is transparent. But more importantly, at being 1/10 of the cost, I think, and the demand for more infrastructure. So you can't, the place where the patient experiences healthcare is in the hospital. So I believe that we have to solve the infrastructure issue, that it calls for dialogue with each of the players, the insurance sector, the hospitals, as well as with the government.
Right, okay, that's the view coming in from none other than Sunita Reddy herself. But Tata Motors PV is also expected to see a weak sequential quarter with revenue estimated to decline 12% and EBITDA nearly halving on a sequential basis. In fact, Avi joins in to tell us more about what to expect from the earnings this time.
So the Tata Motors PV is going to come out with its Q1 numbers, and we expect the revenue to be in the range of 60 to 848 crore rupees, with the EBITDA coming in at 6373 crore rupees, making it a margin of 6.9%, with PAT numbers coming in at 1666 crore rupees. Although we've seen that for the quarter gone by, Tata Motors PV has posted very strong auto sales number month by month, signaling almost 50 to 60% YOY growth. Some things to look out for in the results will be the fact that their Indian PV business is doing very well, with recent launches like the Sierra and Punch EV performing extremely well in the Indian markets. The margins, however, are expected to be under pressure because of commodity cost inflation caused by the West Asia crisis. Talking about the JLR segment, we've seen that they have seen some supply chain disruptions and also a fire incident at the supplier's factory. Also, the margins for JLR are expected to decline on a sequential basis. The growing EV mix for Tata Motors PV is also weighing down their margins. Some things to look out for in their result will be the demand outlook both for the PV business and the JLR business, domestic and international, the commodity cost trajectory and the impact it has on margins, the kind of JLR supply chain restores and when does the volumes normalize, and the new launches that they announced for the EV and ICE version. So all in all, a good set of numbers with good volume growth expected for Tata Motors PV, but pressure on margins can be seen.
Thanks, Avi, for that. But before going that, let's do a quick check on some of the cash rates which are coming in. ICICI Bank, there's an imbalance of negative, so there's a selling pressure which is coming at ICICI Bank. There's an SBI, again seeing an a negative imbalance coming in. So there's more sellers on that counter as compared to buyers at this point in time. You have Power Grid. That's another stock where there's an imbalance, negative imbalance, which is coming into selling pressure there at this point. You have Kotak Bank. So banks is something which is, where we are seeing an imbalance coming in negative. GAIL is seeing an imbalance of 1.4 lakh. So more sellers on that counter at this point in time. So those are some of the stocks which are coming in. Kunal, it's basically gives you a trend of where the selling is there, right, at this point in time. And if you look at what changes are coming in, it's basically last 15 years. We saw that happening with Bharti yesterday, and today with many of the banks we are seeing it.
Yeah, it's more like an extension of what happened during the day. The markets are just carry forwarding that sentiment or feeling, to the closing segment. Yesterday, for example, just prior to the cash, the news flow for Bharti Airtel, etc., started to come out to be positive, and then you saw the stock price moving up hard. Today, I think throughout the entire day, or at least a major part of the day, you've seen ICICI Bank, etc., most of the private sector banking stocks under pressure. The only thing is, which I'm looking at right now, that the value of trade so far on cash is slightly lower than what it was yesterday. So that I think would be the only distinction.
Yeah, and today being a sensex expiry, we are seeing that action happening in the private banks, which have the highest weightage as well. So that's why we are seeing, an ICICI Bank falling nearly 1% in cash session. Power Grid is almost 1% down. You have Tata Consumers cooling off in cash session happening. Kotak Mahindra Bank is cooling off, down nearly 0.8%. Axis Bank is down nearly 0.7%. So the expiry trade happening with the sell figure coming into the cash trade basically, so that you can get the equilibrium price.
Correct.
I just want to check in on some of the other list of stocks as well. All those MSCI India index inclusions in the August review. Let's see what Adani Energy is closing the day with. Grow, Laurus Labs and Lenskart, which started off the day very well. So Adani Energy lower by about almost 1%. And on the futures, of course, it's a completely different rate that you're seeing right now. Grow, Laurus Labs and then Lenskart. Let's see where Lenskart shut shop for the day. Grow, of course, just about mildly higher. Although it started off very well in trade. Lenskart gave up some of its morning gains, but still managed to close in with about 1.5% gains. Of course, Lenskart earnings were very smart. You had an EBITDA jump up of nearly about 75%, margins at 22%. And I guess it's just an extension of that unorganized to organized retail play, that very structural theme which is currently at play, and one can see that as a reflection in Lenskart numbers as well. Having said that, within this pool and theme, anything that you like?
Lenskart is doing pretty well. As you said, that shift from unorganized to organized is really happening. Online as well as the physical presence is really helping Lenskart. From my perspective, from a growth perspective, within this new age companies, Eternal continues to be my top pick. For a contra pick, I think Swiggy, if they are able to turn around the Swiggy Instamart and their management issues, that will continue to remain the topic within the entire new age technology company space.
Right. Okay, that's the take coming in right now on Swiggy. And Kunal, we've often debated Eternal or Swiggy or both. Where is it that you're taking fresh positions, if at all?
Yeah, both of course are looking attractive. But what's happened over here is that in the last, I think a 2 week time frame specifically, Eternal has notched up another 4%, 5% gain. So from 300-ish levels, the stock has moved up towards 315, 317 mark where it's trading right now. In the similar time zone as such comparatively, I think Swiggy has corrected from 300 levels to 285, 280 thereabouts for the stock price. So just in the last, I think a week or so, Eternal has managed to show that signs of relative outperformance. But I would sense that I think both these stocks are looking very attractive. The only positive part when I look at Swiggy's chart is that the stock is still trading at a multi-month low or closer to those multi-month lows compared to the last, I think, 6 months, 12 months of price trend for Swiggy, where at one point the stock was almost at 400, 420 plus levels. So comparatively, the stock is available at a very classic risk reward at the current juncture.
Okay, that's the take coming in on some of these food aggregators and of course the QCOM plays as well. Tata Consumer, that definitely is closing the day much higher as opposed to where the picture was yesterday. While the Nifty is closing in absolutely flat, Tata Motors PV ahead of its numbers is looking strong, over a 2% move. TCS as well higher by about 1.5%. Unilever, Techem, Asian Paints, L&T, this is where you're seeing the strength right now. But Sajid was just flagging off the weakness within the banking pack. Look at an ICICI Bank that's closing in about 1% lower. HDFC Bank nearly 0.5% lower. Axis, Kotak as well have been underperformers, and SBI as well is closing in with a 0.5% downtick for itself. Where is Geo Financials? Let's check in on that stock and what that stock is up to after the deal getting announced from Bank of America yesterday. That stock 255 thereabouts is where it is closing in for the day. Kunal, any further headway you think the stock can make, although it's already run up quite a fair bit in the last 2 odd months?
Yeah, but I would still believe that I think it's still not found its tempo or the erstwhile momentum back again, because it's still struggling to break past above a very immediate hurdle of the 200 moving average. Case in point, for example, over the last, I think, 1 month or so, the stock has been trying to struggle to break past about 270, 75, which is also the 200 moving average for Financial. But I think, frankly, it's a matter of time, because the way the entire sector has been trending, you've seen fresh breakouts, big recoveries for many of the stocks in the financial services basket. I would sense that Geo Finance could probably be breaking out about that 270-75 mark pretty quickly. Today, I think could be a one-off day because of the news flow surrounding the stock price. So maybe it could be like a buy on rumor, sell on news for the stock. But I would sense that once stability comes back again, the stock should be good for 275 plus.
Also, keep a lookout for some of the other companies as well, especially in the railway pack. There's an upgrade of 238 AC locals which have come in, which is now going to be produced by the integrated coach factory. Earlier it was supposed to be pushed to the private, some of the other players like a BML and others who were supposed to make it, but now it seems the railways is going to make that going forward. So that's something. But yes, if you look at the Nifty closing today, it's at 24,395, just below the 24,400 mark, closing just almost flat, 40 points lower there. The sensex closing a little higher on the back of that expiry. That's a differential which is coming in today's pack because of the liquidity which is there. So the sensex closing 113 points higher and the Nifty closing lower, Kunal, in that sense. And Nifty Defense is one of the big players, 1.55% up. Nifty Chemicals is at 1.25%. Among the losers, you have Nifty Metals and Nifty Private Banks, which is the Garden Reach up 2%. Mazagon is up 0.74%. You have you also have BEL up nearly 1.8%. So Nifty defense is the sector of the day and holding on to in today's trade.
Okay, that's a little bit of color on where is it that you're seeing the concentrated moves. Other than that, it's the usual suspects we've been flagging off, and Astral, which is closing in with a 9.5% gain. Solar Industries, about an 8.5% uptick coming in there as well. And then, of course, there's a Concord, which closes in with a 4.5% move. Oberoi Realty has done very well today with a 4% dash. BDL sprung up another 3.5% as well in trade. BEL too looked very good. Actually, Aditya, this has been quite the consistent theme, right? Defense. At that, railways as well. Any fresh opportunities, even at these levels, that you scout for or have already identified?
From my perspective, defense, it is a 10 to 15, 20-year-old theme. It will continue to run. The government indigenization is a real theme that is taking place. However, valuations across most of these stocks run at about 50 to 100 times P multiple. For example, Solar Industries reported its numbers today. The stock is up in trade today. The stock trades at about 90 to 100 times P multiple. So from my perspective, good stocks, if you already own them, fresh entry I would think to avoid right now. And then if the sector undergoes some correction, that could be an opportunity. But as of now, answer is no.
Okay, that's that. But Aditya, good to speak with you on the show. We'll let you go on that note. We'll take a very quick break, come right back and analyzing what the trading day so far has been like.
Welcome back. You're watching Closing Trades. And let's look at what's happening in the F&O market because that's going to close in next 3 minutes. The Nifty closing flat at just below the 24,400 mark, and we're seeing short positions getting built up there, and Nifty open interest up nearly 1.83%. In Nifty Bank, again, that saw some volatility today because the private sector banks is down nearly 0.4%, and again, short positions seen there, a 1.7% jump in open interest position for Nifty Bank. If you look at the constituents of Nifty Bank, you'll see that a lot of private sector banks saw either long unwind or short build up coming in. So ICICI Bank saw a long unwind, HDFC Access, Kotak saw some short build up there, except for IndusInd and Bandhan where we saw some short covering. It was pretty much an unwind of position of long or adding of fresh shorts coming in. Look at what's happening in the call and put writing there. We had a good amount of call writing coming at 24,800 levels, so that's inching up to become a good resistance going forward. We had put writers active in 24,300 and 400 levels, and if you look at the distribution at the 24,400 levels, we had a good amount of open interest positions with respect to call writing. So that's also holding off as a resistance for the market at this point. But look at the gainers, Nifty gainers, F&O good gainers. Astral was up nearly 9.2%, short covering seen there. Solar Industries, numbers came in towards the end of market. We saw long build up coming in there, 8.5% jump. Concord saw some long build up, 4.5% jump in futures. In the losers pack, you had Nalco, Force Motors and Page Industries all seeing some short build up down nearly over 4% in today's trade. Open interest gainers include stocks like Page Industries, 16.4% jump in open interest for Page. Geofin saw some short build up, open interest up nearly 13%, and Solar Industries seeing a long build up, most of them that coming in the last 40 minutes of trade. So open interest up nearly 9% there. In the losers pack, you had LIC. There's a long unwind happening. The stock giving good returns to some of the retail investors who participated in the OFS. Dixon Tech is seeing a short covering today, and Manappuram is seeing a long unwind in today's trade. So that's what is happening in the F&O market. And as we speak, The futures is closing at 24,466 at a premium of nearly 70 points to the spot, and we saw earlier the spot closing almost flat after some kind of movement in the private sector banks, which was basically an adjustment for the sensex expiry that we saw today. So, so Kunal, your closing trades of trade for tomorrow. Let me put it this way.
Yeah, I think we are at a point where the Nifty is not trying to show what the overall market is showing right now, because there's been a good recovery across so many sectors. Look at the Nifty Realty, Nifty IT Index, Defense, Auto, PSU banks, etc. I think except for those 3-4 major heavyweight large cap names, like for example today I was looking at the contribution plate, almost like a 50-60 point cut was seen to three major stocks. I think Reliance Industries, ICICI Bank were amongst the prominent names over there. So this is going to weigh the index over the near term, but I would still believe that the market construct is still extremely on the bullish side. Maybe I think from a trading perspective, we have hit back towards a point where the risk reward is attractive for an index trader to try and go for a contra buy at 24,300 mark.
Kunal, sectorally, do you see any trend building out? I mean, in the last 2 days itself, you've seen one up day, one down day for many sectors, be it PSU banks or metals.
See, largely this will happen, Aisha, because till the time the index doesn't see a follow-through up move, it's going to be difficult for stocks and sectors to find a very consistent, constant breakout moves for themselves, because we are talking of large cap names. Mid cap stocks could be a different basket altogether. But from a large cap perspective, the market requires positive push from the overall index. But largely I think we have to look at this as a pattern overall. If the stocks in a scope of say 1 week, 10 days, 1 month, they stand to recover 5%, 10% odd, then even though it's met with a lot of jagged edges, I would still believe that the trend is quite positive for many of the sectors. And I think this is exactly the case for the likes of metal, realty, IT index, etc. You look at this over the scope of the last 3 weeks, 4 weeks, maybe a couple of months, and these sectors have done phenomenally well. So without the index push also, these stocks are trying to gradually and slowly come back into their own.
Okay, with that, let's wind it up on this edition of Closing Trades. Kunal, thanks for joining in as always. We'll see you tomorrow, and let's bring you our special segment, Commodity.